Today we're going to talk about high performance trading and what the perfect trade setup looks like. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. We've had some fantastic volatility this week, as to be expected, and I think it's going to get even more interesting as we head into Thursday and Friday's trading sessions. I think the indexes could see some very big moves into Friday night's close. Oil, gold, all providing huge opportunities. Us specifically focusing on the currencies, we've had some massive moves on the pound crosses in the last couple of days. Today we're going to talk about high performance trading. What does a perfect trade look like, and what do you need to do to be able to execute those perfect trade setups? So in our past videos, obviously if you've been following me closer and closer, a lot of emails, a lot of fantastic feedback, a ton of questions. I'm going to try and do a question and answer video. Just a tremendous amount of feedback, and hopefully everybody's improving in their trading, avoiding maybe a lot of the garbage that's out there, a lot of the retail traps. Quit giving money to the banks. It really is us versus them. And so today we're going to go back through and review our simple system where we talk about structure, high of the day, low of the day, timings, the market equity opens, how they use that to stop hunt or to continue moves. We're going to talk about the importance of round numbers again. We're going to focus on that. We're going to talk again a little bit more about timings as well in terms of the pre-markets, how they use that for stop hunt hours, how they use that to block up volume after they've made a move. We're going to talk about price behavior and specific types of examples of when they are flipping the book and when we can look to position ourselves in the markets prior to them moving them. We're going to talk a bit more about risk reward and a lot of questions about the measurements of targets. And then we're going to talk about a couple of other things that will relate to performance issues, just understanding along with timings the average daily range, focusing on mastering the 15-minute charts, and then looking at behavior, bad behavior characteristics, self-sabotage, self-talk, and high performance. We talked about this yesterday, planning, preparation, all the things that will ensure that you're paying attention to detail so that it just becomes a mental checklist, even if you have a checklist on your desk about running through the same daily habits and routines over and over and over again with your trading, so that we can get consistent with our results and learn to just stick to the basics but then scale it up in size. And then the other thing we'll talk about as well with this is daily habits and routines in terms of designing your perfect day. So shaping your day around your trading. Not going to the screen and then trying to squeeze everything else in around that. Doing your perfect day and then trading. So when you come to the screen, you're relaxed, you're in a great headspace, you're on top of the world, you've got your planning and preparation done, you're relaxed, you can focus right on the charts. Okay, so what does a perfect trade look like? We've talked about this in other videos about building your playbook. To me, most of the trade setups are very similar. You're going to get different variations of very similar setups. We've talked about identifying structure. So there's the bigger picture, the previous day's anchor points, the high anchor point, the low anchor point. If we're inside of a template, we're going to look at some examples today of what I consider to be some of my ideal trade setups. But then also looking at the bigger structure, rectangles, double tops, double bottoms, head and shoulders, 3 push patterns. I think there's a nice head and shoulders forming possibly on oil on the 15-minute chart right now for a retest of the lows. Triangles, descending, ascending triangles. We saw a great example of a symmetrical triangle on the pound yen the other day, which ended up turning into a Wednesday's big move. But little things again that will allow us to start big and then narrow it down, and looking at then our high of the day, low of the day structure. Are we inside of a bigger structure where we can identify where our bias may be? And so when that's the case, when they come into the Europe-London Open, are we at the high of the day or the low of the day? Are they working at the top or the bottom? The last 2 days we've seen some almost the same trade setups 2 days in a row on the pound New Zealand, pound Aussie. Pins on the bottom. Pins on the bottom again before the Europe Open. A retest of the low and a W pattern with a pin hammer 2 days in a row. Pin hammers with engulfments for a couple of hundred pips moved up before they reverse that market. So again, you're going to see very similar patterns, but the question you want to be asking yourselves is, are they working the top or are they working the bottom? Are there pins there? We're going to go over an example on the British pound, the difference between when they're working the high or the low versus a trend trade. What would you expect to see? What are the precursors to seeing that with our bigger structure that may help us identify the trend trade versus a reversal? And then also we'll talk a bit more about the template again. We talked about day 1, day 2, day 3. So we saw a great example of day 3 yesterday, Wednesday midweek reversal, where they blow off in the direction of those 3 days movement, and that technically drags traders up into that last wave of movement because it's a trend trade, and it rushes away. People are in a big move before it consolidates on a peak, or like on the pound yen yesterday, a 2-bar reversal, and then moving strongly back in the other direction for twice the distance that it moved going up. That's classic behavior on a level 3 day. They hit the high, they hit the low, they consolidate underneath. So we could see some straightaway setups today or tomorrow, but we'll talk about that in the chart setups. So again, are they working the high or are they working the low? Are there pins on tops or bottoms? If you already have pins there, what 00 box are we working? Have they extended those pins out to a 50 level box? So are they buying underneath, or are they selling on top? Or are they inside of the 00 box? And again, this is where our previous day's highs and lows can give us some information of how they've closed the market or how they've put their high and low in place. So again, we've talked about round numbers over and over again, and I've said this before, the timings and the numbers are probably two of the most critical things that you can focus on. Because again, once you see the candle pattern formation, then it's about letting the candle close and then just calmly placing your order in the market as close to numbers as possible, placing your stop in place, putting a measured move target in, and sometimes we'll use number boxes, usually 2 times the box, and currently we've been in some very, very big moves. But if you're in a 50 pip box, my standard target will be 100 pips past that box. So it could be 150, 130 pip move. If we have a bigger geometry in place, and it might be one full structure's distance, that could be a 200, 300 pip move. And again, we're going to review that. So price behavior. Do you know what the perfect patterns look like when the market's reversing? Do you know what the pin hammers will look like? Do you know what your engulfments will look like? We're not looking for those inside of a trading range. We're looking for those at the highs and at the lows. That's where the market is going to reverse. That's where the markets are going to make their biggest moves. So again, we want to know, what do those look like on our perfect chart setups? The reason being is that when you review your charts the day after, especially on mine, I just have numbers on there, so it's very clear to see the high and the low. When you look at the perfect trade setup, it always looks perfect the next day. So when you're on the live screen, you need to be asking yourself, is that a perfect trade setup? Does that look exactly what I'm looking for? Is that a pin hammer at the high on the second shoulder? Is that a pin hammer at the low on a stop hunt after a 300 pip move straight down to 00s? Just little things like that. Risk reward, number 1 golden rule, cut your losses. If you're wrong and you hold on to a loser, you could be in a measured move that goes against your position. So not only will you just have a 1-bar stop, you could be looking at a 50, 100, 150 pip stop loss, especially in these markets. So it's critical that you never, ever, ever move your stop. Now the other side of that coin is understanding how to maximize your profits. So not just getting into the market and saying, I want to get 50 pips. We talked about this again. It's understanding, looking at the geometry and how to properly assess where the target may be for that measured movement of the trade that you're taking. So it may be the high or low of the day in the opposite direction. It may be a measured geometry of a rectangle or a descending triangle or a head and shoulders. If the larger the structure, we usually will expand one full range. If it's a smaller structure inside of a range, I will do at least 2 times that range. So again, some of that will require some discretionary decision making, but at the same time, you want to try and ride the winner as long as you can. Then, of course, as we get later into the session, or sometimes even in Asia, you want to ask yourself, has the average daily range been met or exceeded? Now, that doesn't mean that they're going to stop whenever they meet the average daily range. But if you're into the US session and the market's moved 400 pips and you're at the low or the high of the day with a pin hammer at double zeros, chances are that market may be reversing to stop hunt back inside of the range, especially if it's in relation to the equity opening times or within that 12 candle window. So again, is it a pre-open? We see a lot of the stop hunts pre-open US for the reversals, or is it in that opening hour where they'll blow off? We talked about the 1, 2, 3 patterns to the high or to the low, or back inside of the range. Often that 1, 2, 3 will either be a stop hunt, a blow off, or a measured move. Or is it that hour after the open? Into the last night we saw a big reversal on the pound Canadian. It was in that 3rd hour of the US Open. That's unusual, but it happens. So again, you can be, I had a great question from another trader. He asked, can you trade the traps? Absolutely you can. It's important though, if you're trading the initial move, if it is a trap in that market open, often that market open, that 1st hour, is a trap versus the trade itself. There are still great trade setups that are traps. So they will take you into the high or into the low, and it may be 25, 50 pips, maybe even a 100 pip move. That's a fantastic opportunity. It's just that when you get into that move, that could be the final blow off to end that move, and you want to be making sure that you're taking money off the table. As you know, as you've been watching this longer and longer, you start to recognize that they will make sure, no matter how far away that trader is, if he's in the money, they will come back and get him, whether it's in that session, the next day, or by the end of the week. Most traders will usually have their profitable position either stopped out at break even or put into the red. So, okay, so then obviously, again, we talked 15-minute charts. I'm not using other time frames. Master the 15-minute charts. If you can do that, then finessing that later on is your choice, but I would recommend mastering the 15-minute charts. Now the next part you'll need to look at is your own behavior. Do you do things repetitively? Do you get into poor trades that aren't even part of your trading plan, that end up causing you stress or cause you to lose focus because you're in a poor quality trade and you're missing out on the really good quality trades? Do you get in too soon and then end up watching a candle move in the last 10 seconds to the close and run away against you and stop you out? Are you chasing trades? Are you taking too much leverage? Are you moving your stops? Are you not taking money off the table and then watching the market come back and stop you out, or even holding on to it and going in, watching a winner turn into a loser? Little things like this, whatever they are for you. I've had to work on a lot of little things. I think it requires an ongoing attention, whatever your weaknesses are, and that's where these daily habits and the high performance P's come in. We talked about this yesterday. If you get into daily rituals, daily routines, you reprogram your brain through your patterning and your behavior. So it's really important, if you're doing certain things over and over again that are self-sabotaging you, you need to look at what are those things, and then not necessarily try to cut them out, but eliminate them through replacing them with better habits, better routines, better behaviors, better self-talk, better preparation, all the things that will reprogram your brain to do the things consistently that are going to hopefully produce the results that you're after. And that's where this last part comes in. Daily habits, routines. I talk about this a lot. I talk about it in the 7-step daily routine for high performance traders. That's the audio file. If you haven't got it, go to my blog, download it. It's a free audio file. Bulletproof yourself through your own daily routines. This is the hardest way to make easy money. You're up against the best people in the world. They've got the best access to information, to equipment. They control the book. They know how many people are long, how many people are short. They provide all the liquidity. They see everything on their screens. They are there to take your money. They're the most competitive people in the world, and the only way that you can bulletproof yourself for success, we talk about this in other videos, there's only two things that you can control: how much you win and how much you lose. But all those things go back to every minute of the day, how you spend that, how your thinking is. Are you programming yourself for success, or are you engaging in self-sabotaging behavior? Do you have an edge? Are you exercising that edge, or are you doing other things outside of your edge that are sabotaging your results? Are you taking poor quality trades as well as good quality trades, or are you focusing on one or two trades, and even if you only have one trade a week, are you mastering that trade when it presents, and you have that slight edge possibly on the advantage on the smart money, that you can scale that up, really scale it up? There is no limits in this business. And so it's all the other little things that get in the way of you getting between where you are and where you want to be. So if you take 100 trades and 50 of them are poor quality and 30 of them are reasonable quality and 20 of them are great quality, let's cut out the 80 and focus on the 20, and then get that 20 down to 10 high quality trade setups that you might take once a month, but you might be fully loaded on those trades, and it might pay you 10 years income in 1 year. So those are the sort of trade setups that I'm focusing on, and I've had to work a lot on behavioral issues, all the little things that, again, most traders face no matter where they're at in their trading career. So keep it simple. The simpler you make things, the more reproducible it is, the easier it is for you to reproduce your results over and over and over again. Now, we've talked about this. If you want 50 pips a month, we've seen that there's 50, 100, 200 pips every single day. Now, obviously, we've had a lot of volatility the last few weeks, but when these markets, if they return to normal, you're still going to have the opportunity for 50 pips a day. And when you understand that they're going to constantly be working the high and the low and stopping out profitable traders, and they're going to have trend days 1 day a week usually, but when you understand that and you start to see their playbook, and you really develop your skill set mastering their playbook, and you scale that up, the world is your oyster. So let's take a look at some examples today. Again, a fantastic amount of feedback. I really appreciate it. Again, I'm just going to keep trying to, nail this down with everybody. It helps me stay focused. It helps me really clarify and simplify everything. I know I've had a lot of emails. I'm trying to get through them. Thank you for hitting the like button. Stay disciplined. Stay focused. Keep getting better, and you'll live the life of your dreams. Let's take a look at some examples.
Okay, traders, let's take a look at some examples of key things that will help set up and identify the perfect trade setup. Yesterday's pound New Zealand is very similar to the previous day's trade. We had the market coming off of double zeros in Asia, going up 200 pips before auctioning back down and giving us pins to the low again. And then into the Europe-London crossover, we had the market, again I asked, is the market working the low of the day or the high of the day? And obviously in this case they're working the low of the day, 2 a.m., working the low of the day. We have pins on the bottom at double zeros. They pull it away with an engulfment candle, 1 push, 2 push, 3 pushes to the low, and then pull away in one big engulfment. Obviously some traders may be already positioned on smaller time frames, but again, as I mentioned, master the 15-minute chart. Even though the volatility and the spreads are wider on this pair, the patterns are what we're focusing on. The pattern of positioning ourselves in the market when the market is about to prepare to shift to the other side. And again, we can see the smaller rectangle forming inside of the larger rectangles. And again, 1 push, 2 push, 3. We call this the 33 trade. 1 push, 2 push, 1, 2, 3. On the third push, we had 3 pushes, 3 smaller pushes with pins, and the market shifts away, targeting the previous day's high. So again, we have possibly in this particular case a 50 pip stop, unless you're positioned in around the numbers on the smaller time frame, and that market has potentially a 300 pip move. And once it clears this upper box into the next double zeros, you can position yourself to break even. That market then cleared the high of the day and then went sideways and went straight up into the high before pulling back on a 1-bar engulfment. So again, what is the perfect trade? We saw pins on the bottom, and we saw 1, 2, 3 for structure, rectangle, bigger rectangle, and we also had the 33, the 3 pushes against Tuesday's breakout, the engulfment candle. We get to the high, we have one 100 pip candle engulfing completely the last peak candle, and then 1, 2, 3 bars to stop hunt the short traders with a bear hammer pin at 8 a.m. New York Eastern Standard Time. And this is a term where we can use called flip the book. So they've gone from longs, the pins are on the bottom, the market's long, to putting in a topping formation and flipping the book for the reversal back to get the traders who were long off the bottom. So again, a 1-bar stop, a pin hammer at the high of the day in that 3-hour window prior to the New York Open, 1 hour before, 1 hour and a half before the New York Open. And that market moved down 250 pips fairly quickly. And again, when they're stop hunting, they will move fast to get traders to question whether they should hold on, take money off, hold on to a winner, watch it turn into a loser, all those little things. And then of course, we see pins at the bottom, but that's one pattern, one candle. We see the market pull off, and then traders who have gone long here, again, the market hits them again, 1, 2, 3 to the bottom, and engulfment. So again, that 1, 2, 3 pattern, 1, 2, 3 for the reversal. Pay attention whenever you see 1, 2, 3, the market is preparing to either reverse, stop hunt, or do a measured move. So again, timings, high of the day, low of the day, low of the day, pin hammers, engulfments, stay outside of the ranges. The market, regardless of what you get lulled into there, the market will give you great opportunities at the extremes. I want to just show you this pattern, this 3-push pattern with pins. We looked at this chart previously from a few weeks ago. Same pattern, different variation, 1 push, 2 push, 3 push, pins, engulfments, retest, and an engulfment candle at that Europe-London changeover. Same pattern, just a different day. You're going to see that again and again and again, and you're going to see the flipping the book at the highs. Market moves up, pins flip sides, stop hunt, go back to the high again, pin hammer at the high, stop hunt, 1, 2, 3 down, pins on the bottom, engulfment, retest back to the high. Study these patterns, traders. So again, yesterday we saw an example of a trend trade on the British pound. One of the key things you'll notice about trend trades is that they will tend to go sideways from the previous day's close or stay inside of a consolidation near the previous day's high or low. This market, again, we talked about the 3 things that markets do. They break out, they pull back, and they reverse. We call that a false break, which is an example up here. Breakout, pullback, reversal. We see markets break out, pull back, fill more orders, and continue. And that's what happened yesterday with the British pound. We saw a nice little pop out of the previous day's high, bit of a sideways consolidation pullback with an engulfment just prior to the end of Asia. They moved up 50 pips, pulled back on top of the high of the day, and then at the Europe-London Open, an open drive candle for that last 100+ pip move to the high of Friday, taking out Friday's high, which was one big reversal template. And then we have the engulfment candle just prior to the US Open. The market moved down, pulled back. US Open was inside of the trend line break. After the rollover, we take that high and low for the measured move targets. And when the US market opened, it continued that move down. And again, we don't know if it's going to go one expansion, two expansions. We know that the low of the day is a high probability target. We can either trail that down or watch how that market behaves as it goes through each expansion. As soon as we see pins, if you haven't already taken money off down low, pins are an indication, obviously, again, that the market may be flipping the book. So, trend trade. And again, I want to show a previous example of the trend trade, very similar. Market breaks out, pulls back, fills more orders, and continues. The market broke out, pulled back, and continued, consolidated, and then continued again. Very similar. Breakout, pullback, continues, consolidates, and continues. Study these trend trades, study the other reversal trades. Another example we've looked at before with the double top. The market had taken out the previous day's high, breakout, pullback, consolidation, upside down head and shoulders, 1, 2, 3 to the high, flipped the book, pins on top at the high of the day at the US Open, sideways, pin hammer for the reversal, and the stop hunt for the measured move down. And again, that's an example of a full range expansion as opposed to 2 times the box. Again, when we have a larger geometrical structure, normally the market will hit at least 1 times that range expansion. But again, pin hammers on top at the timings, at the high of the day, coming off of round numbers. Another example yesterday on the, this morning on the pound New Zealand, we saw that market 1, 2, 3 to the high right at the Asia Open, pin hammer to the high on a 1, 2, 3. That market went sideways after taking out yesterday's high and gave us an M reversal. So traders may have shorted the pin hammer, but then we got our second leg with the bear candle after this bull candle, trapping traders thinking that was going to be a continuation move at the 50 level for a 150 pip move down. Pound Canadian yesterday was just a phenomenal example of a day 3 blow off, trapping trend traders up high if they didn't take money off. Day 3, level 3 typically tends to blow off in the direction of the trend, taking trend traders in that last leg, jamming them up high or jamming them down low. Make sure you take money off the table. 1 push, 2 push, 3 pushes, engulfment, pin hammer, flip the book, M pattern, sloping M pattern, measured move targets, low of the day, the previous low of the day session, big range, 400 pip move down from a 1 bar stop at the high of the day. Even with a 50 pip stop, that's still 6, 7, 6.5 times your risk. We get down 400 pips to double zeros. We see the pins and we see the flip the book where they come back inside of the range and consolidate it into the US close. But again, the blow off, level 3, day 3, at the high of the week, 1 push, 2 push, 3 pushes, pin hammer, engulfment reversal, 8 a.m. New York Eastern Standard Time just prior to the New York Open. Structure for measured move, maximizing your profits, traders. So hopefully you're building your own playbook, putting your best trade setups together. Get screenshots. Look for these patterns. They're going to show up again today at the low and at the high. We're going to have some textbook perfect trade setups. Make sure you wait for the candles to close. Keep it simple. Look for the pins. Look for the engulfments. Wait for the timings. Squeeze the most out of your winners. Get better each day. And may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.